I would say not a very high chance. They had the opportunity to table an offer, and this appears to be an offer for a 2-year program. If they were not able to agree on a program extension, it looks a little bit odd at this point that they will agree on a full 2-year program, including OSI, debt relief. So it doesn't sound and doesn't look very credible at this point.
I mean, this just corroborates what we're seeing in other areas, right? I mean, you're seeing housing starts and sales start to pick up. You're starting to see consumer confidence improve. You're seeing initial jobless claims at very low levels. You're seeing payrolls growth starting to accelerate. Wage gains are coming back. I mean, these are all really important things to keep track of, and Greece and Puerto Rico are just smokescreens, and we would really encourage people to look past them. I'm not sure anything necessarily went wrong, right? I mean, we've been waiting for a pullback for a really long time. I mean, even within bull markets, you do get, pullbacks, and really, honestly, we just haven't had one. And we've talked to folks about is, look, when the pullback comes, it won't be on news that you like, and Greece is a great example of that. So, what I'm, saying is that the S&P will probably take a little bit of a breather here, but if you start to look 6, 12, 18 months out, we should be higher.
And I think it's going to be a lot like the first half. If you look at the drivers in the market, it's been about growth. If you look at the factors that are driven the stocks that have performed well, it's been about momentum, and I don't think that's exactly what's driving everything, isn't just momentum, but it's about growth. Value, cheapness for cheapness' sake, or even high dividend yields haven't mattered that much. And I think investors are going to continue to demand some sort of potential for dividends to grow, demand some potential for earnings to grow.
I actually think the place that we prefer to be in is going to be in the small cap space. I think it is more highly leveraged to the economic recovery, which I agree with Bruce is going to gain some traction in the second half. And I think it also has better earnings momentum. So given the fact that small caps are trading at relatively even valuation to the large caps, we prefer to be in that space right now.
So Mike, does that mean you don't like big caps, or you just like smaller caps better?
No, we just have a preference for small caps here. Look, I think what you're going to see is it's going to be a market that the second half, it's going to be one that's going to be led by, to me, it's still going to be the growth drivers, which are going to be, as the U.S. economy gains some traction. But also remember, we're also walking into what's likely to be the beginning of a normalization process by the Fed. Now, at least in the early stage of the cycle, small caps usually do fairly well in that part of the cycle.